Right guys, hi. This is the video to go along with the DAX EOM EOD strategy. This is the illustration you can see in front of you. That's in the actual example PDF. So what I've got here is the DAX on a 5-minute chart. We've got an illustration here of the candlesticks and the stochastic set at 15.55. What we're looking for is the last trading day of the month. We're looking for the market to be sold off into the Americas closing time. So we're looking for the market at 9 p.m. up until a window in 9 p.m. here, and we're looking for, I'll just mark that up, so 9 p.m. here is the window when the market can start and when the market can finish. So this is the window of opportunity for trading. So you can see here, this is the window there. And what we're looking for is we're looking for the market to move on down into 9 o'clock. And then when the market does move down into 9 o'clock, we are looking for this the K line here, the blue line, to pass under this line here, which is a 30th percentile on the stochastic there. So we need the market pulled down as low as we possibly can get from 9 o'clock onwards, and within the time period 9 o'clock to 9:30, we're looking for this blue line here to get as low as it possibly can. And as soon as it's as low as we feel it you possibly can see the direction here. The market is moving up like this. You see the market, the blue lines start to move up within your time frame, 9 o'clock to 9:30. You can then place the trade, or you can wait for the blue line to cross the red line here, the signal line, and then you can place your trade with the appropriate stops and limits. So for the EOM, you want a trailing stop as well as the EOD, different trailing stops at different targets. So in this particular example, the market's come down, and this is round about the level you would have got in, and then the market moves off like so, and we're looking to take the profit. I hope that entry is really clear. Just once again, for a recap, we want to be on the market at 9 o'clock, and our trading window is 9 o'clock to 9:30. We're looking for the market to come down as low as it possibly can. We look for the stoch breaking below the 30th percentile, and we look for as low as we can possibly find it. At this point, I can see it was at that point there, or we look at the market, whichever's your preference. It doesn't really make a lot of difference. The blue line crossing the red line there, and we place the trade, and that is the actual trade. Now, if it's on a Friday night, the trade, then you may want to just go for a 1-to-1. So you may want to go for 30 or 34 pip stop, 34 pip target, or you can leave it on over the weekend as well. It is a trailing stop. My preference is just to leave the trade running, and the first trading day available to check what's going on is the Monday morning. And in Monday morning, we look to see what profits or the performance of the market, and optimally, by the time the next trading day, if it's a Monday, or maybe if this trade's executed on a Monday and it closes on a Tuesday, then you are looking at round about 9:20 is the optimal statistically, with a 2-year back model of when to probably get out of the market. But you've got to be on the ball the next day to close it out if you are going to intervene with the stops and the limits. The only watch out really is do not risk more than 1%. Make sure the market keeps within a volatility of a 3% movement within that day. Do not trade the market if the trade entry is above that day's close. Then there is no trade. There is also no trade at all if between 9 o'clock and 9:30, the stock is not exhausted. If you don't get that exhaust count, no trade. So they're, some very, very important rules. Also, if we are scheduled to get an economic announcement the next day between sort of 7 o'clock and 9 o'clock, we occasionally do, that may well interfere within the trade. Now, if we have an economic announcement, then the ideal thing is to close this trade off if it's in profit before the economic announcement comes in play, or make sure you've got a guaranteed hard stop in case a spike goes in the wrong direction. So I hope that's good for you, and I wish you happy trading. Hope that's nice and clear. Okay.